Brian Shannon from alphatrends.net. Today is Friday, the 21st of May, 2021. Let's look at these markets. First, we'll take a look at the numbers as we typically do. Pretty much a mixed bag for the market this week. SPY up a little bit, Q's down a little bit, Russell down a little bit. Semiconductors, though, were up 2%. Still down month to date, but overall just a real mixed bag here. So let's take a look at the charts, and then we'll take a look at some Bitcoin as well. I'm sure a lot of you are interested in that. So the S&P 500 ran into the declining 20-day moving average. Actually, it's kind of flat in here. It bounced right from the 50-day moving average right up to the 20-day moving average. And when you look at it on a 30-minute time frame, it's just kind of a mess in here. This was looking like an important level of, that it needed to hold as support. It broke down through that, but then kind of left this little island reversal and came back up 2 days ago. So really, again, a mixed bag for the S&P 500. The longer-term trend is still obviously higher here, but we have to look at this market and see that it's correcting maybe more through time than price at this point. We could draw a trend line off of this low actually as well and kind of look like this. And you can see we came pretty close to that trend line. Now the other trend line is off of the April low where it touched on here. So we're just kind of layering the trend line, similar to what I like to do with the volume weighted average price levels. If we see the market pulls back again next week, I think that the volume weighted average price from the March low is likely to be the first level that it catches. But if things really kind of fall lower from there, then we have to look at that trend line off of the April lows, which ties basically the year-to-date volume weighted average price. The good news about this market is I consider it a stock picking market, and that's what I do. The Nasdaq also kind of a mess here. We are right at the declining 20-day moving average. It got a little bit oversold. Big bounce this week. I certainly wouldn't want to chase it in here. This is what I had drawn in last night, thinking that we had wanted to see to let this market stabilize a little bit further. So, going into next week, this looks like the most important level at about 325 for the Nasdaq. If we can maintain at 325 or greater, then we continue to be constructive and rebuild from this most recent sell-off. If, however, we break down below that level, let me just go back to that 15-minute time frame. If we break back below and hold below that 325 level, then I think it paves the way for another test of that volume weighted average price off the November low. So again, it's just a mixed bag, more of a stock picking environment. When we look at the Russell 2000, things remain the same in here. Let me just clear that all off and redraw them. Basically what I was had drawn in there is we're in this bigger range, the bigger band of support down here and the band of resistance up overhead. We're right up to the declining 20 and 50-day moving average. So we're in the middle of a range bound market. No advantage in the market to buyers or sellers here on the daily time frame. So again, it's a stock picker's environment. The semiconductors rallied from that volume weighted average price that we had seen last week. It was tested once again this week, and now we're right up to the volume weighted average price from this peak. We're at the declining 20-day moving average and fell short of the declining 50-day moving average as well. This is where we were 50 days ago. So next week, Monday, Tuesday, Wednesday, Thursday, Friday, we get rid of this data in the 50-day moving average calculation. So it has the possibility that if this market gets trapped underneath the 50-day moving average, we'll start to see it do something like this, I think. So there is danger. Play a strong defense. The key level in the intermediate term is going to be 234. That was prior support, resistance on a couple of occasions, and then we finally gapped back up above it this week, and so far are holding. The Biotechs, these guys year to date, they are lower on the year. So here's our Biotechs. We're down just 7 basis points, but the fact is we are down in the Biotechs, and we've seen it getting hammered at that 200-day moving average and right up to the declining 20 and 50-day moving average. I see zero advantage long or short here on a daily perspective, and on the intermediate term time frame, I think we want to see this level hold initially next week. Somewhere in about the 150 level is probably the more important area. Financials are digesting these big gains through time, really holding up well along that rising 20-day moving average. So they remain the strongest group and innocent till proven guilty. Let's take a look at crypto. The Bitcoin really got smashed this week. And here's the daily chart on the left. On the right, we see a 15-minute time frame. Let's go to make that 30 minutes. So we can see here, this was the big sell-off. If you follow me on Twitter, I had said I was buying a little bit in here, and I had averaged in overnight. That ended up being basically about a break-even trade. Right now, I don't have a position in Bitcoin. It's just a mess here. It fell real hard. It's trying to hold the volume-weighted average price from this October level where the momentum really began. And on a closing basis, so far it has been holding. You can see that on Wednesday and Thursday it closed there. But the intraday action is pretty ugly. We saw a sharp sell-off in Bitcoin today. The old phrase, if they don't scare you out, they'll wear you out. If we take a look, let me just do this and make it into a weekly time frame. These types of declines aren't unusual in crypto, and for the people who are buying the dip thinking it's going to go right back to all-time highs, that's not the way markets typically work, and I don't think it's going to be the case. There'll be an exception made here with Bitcoin. I think that you have to be very patient with this. The trend is now broken. We're below a declining 50-day moving average. Here's the 200-day moving average, which is trying to hold near. The only good thing about that is that it's still rising. If you're looking to buy Bitcoin, there's no hurry. It would be my suggestion here. Just take your time looking to get involved here. Maybe you start nibbling. What I'd really like to see, I think it's unlikely though, is an undercut of this prior low. Instead, maybe if you start nibbling in here, don't buy to hold, but buy to sell on rallies, because it's just the momentum's broken there. Some names that look at some of the bigger names. Apple, it's a mess here. There's no advantage that I can see. We could draw this in and say maybe there's a triangle forming, and will it break higher or break lower? That's anyone's guess. You back it out to the weekly time frames. We haven't seen this many times that the 200-day moving average was tested. The more times anything is tested, the more likely it is to fail to hold. So just keep that in mind in terms of Apple. AMD sure looks toppy to me. Amazon on this weekly chart, we had a failed breakout. I wouldn't be surprised to see it drop down in towards here. There just seems to be a lot of danger in this market. Shares of Beyond Meat, Facebook are probably holding up better than most anything right now. Tesla obviously is a mess. It's trying to stabilize near that 200-day moving average, but so far it's anyone's guess as if it will continue to hold. What I was hoping for this week was maybe we would undercut this prior low a little bit and then be able to see reversal. That didn't happen. Again, in all of these markets, we're below. In all of these, a lot of these momentum names, we're below declining 20 and 50-day moving averages. If you were looking to buy in here, you should only be looking to buy for a trade, not for a buy and hold, because the momentum is lower.